The top business stories live from the Sky News City studio. FTSE 100 is knocking on the door of a record closing high. We'll have all the latest from the markets. The UK's third largest supermarket chain Asda reports a slowdown in sales growth but a big rise in underlying profits. Plus, can a single capital market help the EU become more competitive? Good afternoon. This is Business Live with me, Ian King. The FTSE 100 has been flirting with an all-time high today. We'll have more for you on that later in the programme when we get the official close. But in the meantime, Asda today reported a slowdown in sales growth, even as it reported a rise in underlying profits. The UK's third largest supermarket said that during the final 3 months of 2023, it grew sales by 2.2% on a like-for-like basis. That's the measure which strips out the impact of store openings and refurbishments. Well, that was slower than the 2.8% at which like-for-like sales grew in the previous quarter and 9.6% in the one before that. Asda, which is owned by the private equity firm TDR Capital and the brothers Mohsin and Zubair Issa, reported adjusted earnings before interest, taxation and accounting measures to £1.1 billion for the year, which was up 24% on 2022.
Clearly, we've been going through a period of significant inflation through the back end of 22 and into the beginning of 23. That inflation definitely began to fall in the second half of 23 and into the beginning of 24. It's still there, though. You know, inflation has come back down, but it's still, I would say, higher than where it was leading into the cost of living crisis. We've tried to do the right things for customers, investing in just essentials, investing in Lidl and Aldi price match. And we are inflating in the first quarter this year slower than the market, but inflation is still there. It's come down, but it's still a bit higher than what it had been.
Thames Water has promised to invest an extra £1.1 billion in its network over the next 5 years. Publishing its updated business plan to the industry regulator Ofwat, covering the 5 years to 2030, Thames said this would take investment to £19.8 billion. The company, which supplies 16 million customers in London and the Thames Valley region, said the extra investment would be spent on environmental projects. It stressed that the extra spending would come with no increase to customer bills by any more than the 40% rise already proposed for 2025 to 2030, which would take the typical household bill to £608, around £1.67 per day. Well, Wednesday this week will see the start of a two-day EU summit aimed at eliminating barriers between capital markets in the bloc. Completing the long-sought-after Capital Markets Union is seen as central to driving investment in the EU and stopping money instead heading to alternative destinations such as the United States. An estimated €250 billion worth of EU capital heads elsewhere each year. Well, joining me now is Nicolas Makel. He's Chief Executive of Luxembourg for Finance. Nicolas, good to see you again. What are the benefits, as you see them, of Capital Market Union?
Well, I think if you look at what the current situation is over the last 15 years, the European economy, and I'm not talking only about the EU economy, but also Britain, for instance, has really lost a large edge of its competitiveness. If you look at banking, for instance, market capitalization of European banks went in those 15 years from 2.7 trillion to only 1.6, while American banks did the opposite. They went from 1.4 to 2.6. And in the asset management industry, it's the same. So what we need to do in the EU, at least, is to look at how we can leverage the size of this single market of 450 million relatively affluent customers to our advantage, to really make companies be able to sell their products and in particular today their services in a frictionless way, so that really the depth of this market can be leveraged in order to increase our competitiveness. I think that is the objective. Now, that obviously isn't easy because as discussions have shown last week, there are differences. Member states have various cultures and so on. So it's an ongoing process.
Nicola, I mean, the Capital Market Union was first recommended 10 years ago. I mean, you've hinted at this in your last answer. Why has it taken so long?
It's ongoing, as I said. I think that if you look at it, this was proposed 2014 under the leadership of Jean-Claude Juncker, and then the then still UK commissioner. It's not that nothing has happened. There has been progress, but this is incremental. And there isn't one proposal. There's a whole flurry of different proposals covering all sorts of different issues, and that are not taking on one by one, but it's asymmetrical, and some obviously are more difficult than others. I just take one example, which is insolvency laws. Now, if you look at, ask any lawyer that you might know, and they will tell you that their national insolvency law is something that has served them well for the last at least 100 to 150 years. And if the EU wants to harmonize this area, well, they should take inspiration from whatever the German or the French or the Italian or whatever insolvency law, but try building one set of insolvency rules, and you will find that that's a difficult exercise.
Indeed so. I mean, there's another big disagreement, which is on the role of ESMA, the capital markets regulator. I mean, basically, the French and the Dutch want it to have more power. Countries like yourselves and Germany don't really see the need.
Well, I think I haven't heard what problem this would be the solution to. I think, as I said before, what we need to do is to build a capital markets union that would allow companies to operate in a frictionless way. The single market has been built on common rules, and then a mutual recognition of if a company operates from one jurisdiction within that single market, it can do so within the other jurisdictions of the single market. But I don't necessarily see the need for one additional layer of bureaucracy. We are all in a situation where we say that there's too much regulation and there's too much bureaucracy. Even the European Council conclusions are calling on reviewing and simplifying the regulations so as to cut red tape. And I'm not sure that adding a layer would really bring benefits to it. I'm not even sure that we would be having this discussion I mean, you rightly say that Paris has been pushing this, if ESMA wasn't in Paris.
Nicola, this is the last time we're going to be speaking to you in this capacity, because you're off to become Luxembourg's ambassador to the EU. So we wish you well in that job. Thanks for joining me today.
Thank you very much. It was always a pleasure. Thank you.
Good to see you. Some other business news stories for you now. And the components manufacturer Tyman has become the latest mid-cap British company to fall to a foreign takeover bid. The company, which employs 3,400 people in 16 countries worldwide, has agreed to be bought by the US company Quanex Building Products for £788 million in cash and shares. Tyman, the oldest of whose businesses, dates back to 1838, designs and makes components used in sliding sash and bifold doors and smart entry and monitoring products, including sensors and alarms. Mobico, the transport company that used to be called National Express, said this morning that its chief financial officer, James Stamp, will be stepping down in June after accounting issues twice caused it to delay publication of its full-year results. The delays related to working out future losses the company now expects to make on its German rail operating contracts. Well, the news came as Mobico reported a 36% fall in adjusted full-year pre-tax profits for 2023 to £92.9 million. The shares have fallen by just under 10%. Hornby warned today that sales in the 3 months to the end of March have come in below expectations. The models and collectibles group, whose brands include Scalextric, Airfix and Corgi, blame the early timing of Easter and Red Sea delivery delays and the resultant movement of some high-value containers into April instead of March. It said that as a result, it expects to report a more widening of pre-tax losses during the year to the end of March. The shares have fallen by 9%. Now, after a fairly lacklustre 2023, venture capital investment is growing again in Europe. Figures published today by the data provider Dealroom suggest European startups raised $13.7 billion in the first 3 months of the year. That was up 5% on the same period last year. For the fourth consecutive quarter, energy tech is the most funded startup sector in Europe, while the UK remained the most popular investment destination. It attracted more investment than the next two most popular destinations, Germany and France, put together. Well, joining me now to talk about this is Sahar Meghani. She's partner at the Visionaries Club. Sahar, welcome to you.
Thanks for having me.
Is this the sort of recovery that you would have been looking for at the start of the year?
Absolutely. This is great news for European the tech ecosystem. I think we feel that the ecosystem is very much alive and well. We think investment levels have really stabilized post a sharp drop, back to 2021 levels. And it's fantastic news because we're seeing good news across different fronts. So as you mentioned, investment is up 5% year over year. We saw 500 companies raise 2 million or more for their startups, and that's in the early stages. If you go later down the line, startups that are raising 100 million or more in the later stages, that was up 2x year over year, which again shows the resilience of our European tech ecosystem. Geographically, too, we saw a lot of diversity in terms of where these startups are based. And so the UK, as you mentioned, led in funding. We saw funding coming from Germany, from France, and the Netherlands actually broke records thanks to a few mega rounds that were announced there. I think this is very much in sharp contrast to the US, where we see innovation really concentrated in very few cities and hubs. And I think from an industry perspective, too, you mentioned energy really was the leading force for the uptick this quarter. But we saw funding in fintech, in enterprise software, in health, and of course, generative AI also had a decent amount of investment this quarter.
Yeah, although generative AI, I think, only attracted $399 million. There were lots of other sectors that attracted more. Why is that?
Yes, I think you have to look at these numbers kind of quarter over quarter. So I think if we think about the rest of 2024, and when we look at our pipeline, there's a lot coming in generative AI. The companies in Europe that are building generative AI solutions, I think they're focused more on the tooling and the solutions that build on top of the infrastructure. The infrastructure is really the more capital-intensive part of where the VC funding goes. So a lot of the founders that are building in Europe are building tools, say, for doctors to help free them of the administrative burden of all the paperwork and having to write up their notes rather than spending time with the patient themselves. We recently invested in a business called Causally, which helps research scientists really accelerate their work to help sift through a lot of publications to accelerate drug discovery. That's the kind of work that the generative AI startups in Europe are really focused on. They take less money than some of the infrastructure plays that are happening in the US, but we expect a lot of funding going to it this year.
OK, I mean, do you think Europe can ever close the gap on the US in this regard, then?
I think I'm very optimistic. We've seen some big rounds happening in Paris, for example, with there's a company called Mistral, which is going toe-to-toe with OpenAI. I personally feel that we have the talent, we have the capital, and very much the ambition level to build some really game-changing businesses. It's still very early when it comes to generative AI. And I think from the investor community, there's a lot of optimism in terms of what can be built in Europe.
Now, in the meantime, energy tech continues to attract the most money in terms of individual sectors. What sort of activities is that going into?
Absolutely. I mean, I think there's been a really big momentum in Europe to decarbonize and to electrify Europe. A lot of the funding that we've seen this quarter very much is going towards those that kind of really important work. So we're expecting 30 million electric cars to be on the roads in Europe by 2030. If you think about the infrastructure that needs to be put into place for that, so all the charging networks, the software that needs to support those charging networks, the fintech and the payment infrastructure that needs to be in place, this is very expensive work. And actually, we're really excited to see energy and climate tech really get the funding that it deserves in order to get Europe kind of leading in these fields.
And briefly, you mentioned there have been some big rounds already this year. Would you expect that to continue over the rest of the year? What's 2024 looking like?
Yeah, I mean, I think if we look at our pipeline, there's some really interesting businesses kind of across stages that we're seeing. So we're seeing very young startups. Of course, these will not move the needle as much in terms of the gross number of funding, but we're also seeing later stage companies. We think there's a really strong pipeline of what we call, unicorn companies of $1 billion of valuation or more. I think what I would love to see at the end of 2024, maybe 25, is see the IPO window opening up a bit. And so hopefully some of that pipeline of companies can reach their next milestone, and we can see some real giant success stories in Europe.
We all live in hope of that. Sahar, good to see you today.
Thank you for having me.
Still to come here on Business Live. There's the FTSE 100 at the close. That is a record closing high. Not an intraday record high, but it is nonetheless a record close. All the latest coming up next on the market. Stay with us.
It's an opportunity for young people who, just like myself and my co-founder, Phoebe Smith, we didn't have opportunities like this growing up, and we thought that we've had a good run of things. We've been fortunate enough to be able to travel the world, see what's out there, see how we impact the world and how it impacts us. And now we think one of the ways that we can help change the cultures that we're seeing developing, especially in our urban areas, is by inviting more young people into these natural spaces. Well, the great thing about the trip to Antarctica is it does exactly what we hope to achieve, which is introduce young people to places they didn't think that they belonged, or places they didn't think they'd ever get to. And even if they could imagine getting there, they didn't have the resources or the connections to make it. The fallout from Antarctica is that we've had young people who've now changed the courses that they've done that they've gone on to do at university. We've got young people who've managed to get work placements, paid internships as a result of conversations they had on that expedition, and as a result of the learnings, the things they've taken away. I myself, I've had maybe 3 or 4 people, young people, asking for references, and I know Phoebe has too, just and solely because of that trip. I know also that they've used that trip and the experiences that they've had to go on to answer those really difficult questions that you get when you go into an interview, like, tell me a time when you worked as part of a team. Tell me a time when you overcame something that was a cause of anxiety to you. So I know that trips like this one, especially the one to Antarctica, had a huge impact on so many young people. And we keep in touch with them to this day. And I know they go around, they visit schools, talking to other young people and steering them clear of the troubles that's out there on the streets. The last time around, we had about 700 nominations. It was the most difficult thing for me and Phoebe to whittle that down to 10. This time around, we want it to be 10 times as many.
Emirates premium economy. Maybe one day all airlines will have seats like this. Fly Emirates, fly better.
Thank you.
Well, the FTSE 100 has hit a new all-time closing high. It didn't quite reach a new intraday high. We'll have a lot more on that in just a few moments. On the foreign currency markets, having last week hit a 5-month low against a basket of currencies, sterling has fallen again today, currently off 0.25% against the dollar, 1/6% against the euro. As you can see, that's the current picture. On the equity markets, here's how they finished up in continental Europe. All of the main indices in positive territory, bar the MIB in Milan. Talking points today have included Embracer. The Swedish gaming stock has risen by 7.5% in Stockholm after announcing plans to break itself up. Well, here in London, here again is the FTSE 100, up just over 1.5% there. That is about 11 points better than the previous all-time high for a close finished in February last year. It was a broad-based rally. All of the big foreign currency earners have certainly benefited from the weaker pound. You can see the FTSE is up 128 points on the session. Well, Shell, AstraZeneca and HSBC added 50 points to that on their own. In terms of the percentage gainers, well, Sainsbury's and Marks & Spencer were both in the top 5 today. That was on the back of supportive broker comment. Outside the FTSE 100, the leading mid-cap gainer is Timon. That one's risen 34% on the takeover approach, while Hypnosis Songs has risen by some 10% after private equity giant Blackstone indicated at the weekend it would pay $1.5 billion for the music investment firm, which last week agreed to a $1.4 billion takeover by Nashville-based Concord. Over on Wall Street, well, there has been a rally from the sell-off on Friday evening, with Nvidia attracting some bargain hunters. That one fell 10% on Friday. It's up 2.25% now. But Tesla is off another 4.5% after it announced price cuts in a number of markets. Meanwhile, on the commodity markets, the oil price sold off very sharply last week. It's drifted again lower today. A barrel of Brent crude will currently set you back $86.92 a barrel. That is just over 0.2% lower on the session. Well, joining me this afternoon is Russ Mould, Investment Director at AJ Bell. Russ, good to see you today. Is this all down to the weak pound by and large, do you think? Because, I mean, the FTSE is really conspicuous compared with the other European markets.
Yeah, I think in the short term that's definitely been a big boost to the FTSE 100 and that move to that closing high. We get, what is it, 2/3, 3/4 of the FTSE 100's earnings come from overseas. So, again, when you see big names like HSBC or Vodafone, for example, or AstraZeneca, or big dollar earners, that's clearly a contributor. But over the longer run, this is a market that's underperformed for what feels like forever, and underperformed can mean underappreciated, and underappreciated can mean undervalued. And we've seen lots and lots of takeovers in the last 2-3 years. Even some FTSE 100 companies have gone like RSA, and maybe, just maybe, some investors somewhere, not just trade ones or private equity ones, but institutional ones, and maybe thinking there might be a little bit of value to be had here.
Yeah, quite worth pointing out to viewers who may not normally tune in. I mean, you get a rise in the FTSE. Sometimes that's just a markup. Do we know whether there's been actual much volume behind this?
That's tricky to tell. We'll have to have a dig into the numbers. I mean, the thing is now on a day-to-day basis, 75-80% of the volume can be algorithm trading funds, software-led funds. It's not necessarily people making the decisions, so they could be responding to certain macro stimuli or computations that they've made. A weaker oil price, for example, could be seen as helpful for some companies, but the currency, I think, is definitely going to be a big driver for that as well.
Yeah. Now, you mentioned takeovers. We've had a couple of interesting situations among the mid-caps today. First of all, Timon. I mean, I mentioned that, up 34%. I mean, that gives you an idea of the sort of valuation gap that exists in the market.
And again, this could be one of the reasons why the FTSE 100 is up, but you know, a 35% premium should be enough to get the deal over the line. It's a cash and stock deal from an American buyer. I think the average premium paid for 15 deals announced so far this year is nearly 50%, which again shows you just how much value there might be if you're prepared to have a little bit of a dig around and look. And Timon, another classic example.
Yeah, I mean, it shows how unloved a lot of these stocks are. I mean, it's really quite
It is. I mean, part of it may go back to 2016, because whatever the British people thought, international markets haven't embraced sterling assets ever since then. And also it may be down to some of the unintended consequences of MiFID II and regulation, whereby the unbundling of how broker research was paid for, so you had to pay a direct commission rather than just in a slightly more hidden fashion, means that brokers have been finding it harder and harder to get value out of covering some of these stocks. So there's been a vicious circle. Less commission, less research, and it's just going to go on a little bit like that for the mid and small caps particularly.
Absolutely. Now, the other takeover situation we've got to talk about, Hypnosis Songs.
I can bet shareholders can't believe their luck, can they? It was down at 60p a month ago. Dividend had just been cut. Lawsuits flying around everywhere. Much debate over who was the most appropriate manager for the assets of the music catalogue. And you've had 2 bids within a week, and the shares are now back above £1. So, frankly, I'd imagine they'll be fairly happy for somebody to put them out of their misery, quite frankly.
Yeah, interesting, though, that Blackstone have come in at this particular level. They work very closely with Mercuriadis, the founder. They've probably got a pretty astute idea of what these...
You would like to think so, but the tricky bit with Hypnosis is there is a lot of debt in there as well. So you're not just buying the assets in the music catalogue and the cash flows, you are taking on quite a lot of liabilities. Again, they should probably understand it better than anybody else, given the relationship that's there. It's interesting now to see if Concord, the American firm from Nashville, come in with a counter or not. The shares are right on the bid price, which suggests the market's wondering whether they'll have another dig.
No, separately, we've had Mobico, some dire results today. I guess it's reassuring, you know, it's not just in the UK that these privatised operators mess up on rail contracts. No. They've done it in Germany too.
You can argue they've been a bit unlucky when the German Statistical Office scrapped the inflation measure that they were using to recapture some of their fuel costs. But it does show how complicated some of these contracts are. It's tripped the company up very badly, delayed the results twice. The figures themselves were actually no worse than expected. That didn't say an awful lot when you've got 12% revenue growth, but a third drop in profits on an underlying basis. Chief Financial Officer's going. The lady who's coming in pitches herself as a turnaround specialist, so there is work to be done. Looking at the Mobico chart, I don't think I can find a lower closing price ever since it floated, you know, nearly 20 years ago when it was National Express.
Yeah, sad times. Russ, got to leave it there. Always good to have you with us. Thanks for joining me. That's it from me. I'm back at 11:30 tomorrow with our next edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Mark Austin with the News Hour and all the latest on the Rwanda debate. Don't go away. Cheerio.
It's 5 o'clock. I'm Mark Austin. This is the News Hour. 60 minutes of news, analysis and interviews. We begin right now with the top stories this hour. MPs to vote on sending the Rwanda bill back to the Lords after Rishi Sunak tells Parliament to sit for as long as it takes to end the deadlock.
People's patience has run out, as has mine.
An early end to day one of Donald Trump's hush money trial in New York, where for the first